This episode of The Apartment Guys is being brought to you by Greenlight Equity Group. Greenlight Equity Group acquires and operates cash-flowing multifamily assets in progressive metropolitan markets such as Salt Lake City, Idaho, San Antonio, Oklahoma City, and Columbus, Ohio. Greenlight targets consistent, solid returns for its investors and a healthy environment for residents by operating high-quality, safe, clean, affordable apartment communities. To learn more about Greenlight and to sign up for the investor list, go to www.glequitygroup.com.
To educate, inspire, and empower real estate investors to reach their highest potential. Each week, host Tate Seamer interviews high-level guests from all over the industry who are sure to bring valuable, actionable ideas that will propel your career to the next level. Whether you're just starting out or a seasoned investor, you are in the right place. And now your host, the apartment guy, Tate Seamer.
Right on, everybody. Welcome back. Another episode of The Apartment Guys coming at you. Really excited about this episode. We have Mr. Eloy Retana. He is the man in the mobile home park investing scene and brings a lot of wisdom to the table in addition to all of his knowledge about investing in mobile homes, which is very similar in a lot of ways to investing in apartment buildings, which this podcast is about. So it's a good deep dive into a lot of different things related to apartments and also related to mobile homes. Hope you really enjoy it. Guys, I'm really excited. I just released a brand new downloadable ebook called FIRE, which stands for Financially Independent Retire Early via Apartment Investing. So it is downloadable at my website, which is www.glequitygroup.com. Again, that's www.glequitygroup.com. And hope that you get a lot of inspiration out of this book. It's all about basically setting yourself up for life with passive income through investing in apartment buildings specifically, versus something like the stock market or other forms of assets that may produce or may not produce a return for you. We talk a lot about the huge advantages of the commercial multifamily asset space and all the tax advantages and cash flow and equity growth, and basically setting yourself up with these investments that are essentially passive investments in these assets so that you can live the life of your dreams and the life that you quite frankly deserve to live, in my opinion. So with that said, go download the book and start. If you haven't yet started visualizing a life that you really would love to live, and you may already have that, and that's a wonderful thing. But a lot of us are intentional about creating the largest life possible, and I'm definitely one of them. And achieving financial independence through apartment building investing is my key to the kingdom as far as getting to the lifestyle that I am intentional about creating. So I'm really excited to be on that journey. Anyway, without further ado, let's jump into this podcast episode with Mr. Eloy Retana. Welcome, everybody, back to another episode of the Apartment Guys podcast. Today, we have Mr. Eloy Retana in the house. He's going to be sharing with us from his beautiful high-rise apartment in Denver, Colorado. All the things that make Eloy Eloy, and in particular, we're gonna talk about mobile home parks and what an exciting investment opportunity they are. In particular, in a lot of ways, there's similarities between the asset classes of multifamily apartments, and which we talk about every week, and mobile home parks. And mobile home parks are an asset class that really, I mean, they have some really compelling qualities to them. And all right, we'll get into those and why they're so exciting, especially right now during the pandemic. So I'll just introduce Eloy. Eloy is a passionate real estate investor, and he's author of the book, The Top 10 Reasons to Invest in Mobile Home Parks. There you go, right there. And I'll just go ahead and tell you, if you want to download that book, you can go to partnerwithapex.com, and Eloy will hook you up with that book. He's also the host of the Savvy Mobile Home Park Investor podcast, and he's currently invested in 113 apartment and mobile home units. And he's also investing in his ongoing education, both through real estate investor courses, top-notch courses, and through personal mentorships with two of the industry's leading experts, Mr. Brian Ellis and Mr. Adam AAA Adams himself, one of my mentors and one of my favorite people in the world. Eloy educates why currently during this pandemic, mobile home parks have outperformed all other real estate classes, and why he considers them to be a safer asset to be invested in as we enter a period of economic uncertainty. So I'm really excited for this discussion, and I look forward to learning myself about mobile home parks and that opportunity. And Eloy, thank you so much for taking your time and being with us today.
Hey, Tate, it's an honor to be here. Thank you for having me. Very excited to be here.
Yeah, you bet. So let's start out with just kind of sharing with the audience a little bit more about Eloy, kind of where you're from and how you kind of got to where you are on a real estate level, and, what makes you tick.
Right. So 20 or so years ago, I started taking some classes on single family homes because I decided I wanted to buy a rental, and I quickly realized that I couldn't afford that many, right? And so I was going to have to find alternatives to purchasing. So I signed up for, at that time, it was a lease options course out here in Denver, so that I can learn to purchase homes, single family homes via lease purchase. Just right around that time, my career in IT was also taking off. So it was one of those pivotal moments where I had to decide whether I was going to focus more on my IT career or whether I was going to go headlong into this real estate thing. I chose my IT career. I wish I hadn't, but I did at the time. And I decided that, well, let's put this lease option stuff on the back burner as a career anyways. I did pick up properties here and there, but I quickly realized that in order to reach your goals, your income goals, you were going to have to pick up a lot of single family homes, right? So that's kind of how I got started.
Gotcha. So you're the second IT person that we've talked to in the last 3 weeks, I think, or ex-IT person. Jack Adua was on the show a couple episodes ago, and he's a Boise guy, lived in Utah for a while, but he same thing, same story, cut his teeth in IT in the corporate world and started investing himself in single families and worked his way up and eventually quit his IT gig. So what happened with your IT gig? Are you still doing it? Or are you in real estate full time?
Yeah, so I'm still doing it. It's just what happened in 2008. I realized that after I lost all my money that I had in my 401k, I realized that I was going to have to kind of take a step back and try to figure out what is it that I wanted to do, because this Wall Street thing wasn't working out too well for me, right? And I figured I would rebuild around real estate, right? But I was thinking at that time, I was thinking that I could build out more it was more of a retirement plan, right? Just build out a bunch of single family homes, build out a portfolio, and by the time retirement rolls around, I can live off of these rentals, right? That was kind of the plan. And as the years went by, and I delved into things like wholesaling and doing my own flips, I hated all of that. I realized that I wasn't going to be able to get to where I wanted to go quickly enough, right? So right around that time, I met my now partner, Steven Anderson, of all places, a salsa dancing community. We were both salsa dancers out here in Denver, and him and I had become good friends. And right around that, one of those times, I asked him, "Hey, what do you do for a living?" And he said, "Hey, I flip houses." I said, "You flip houses?" He goes, "Yeah, and I do new builds out in Park County out here, close to Colorado Springs." So he would buy these empty plots of land, and he would build out these beautiful cabins on them. But he had kind of seen the writing on the wall that was kind of, it was, that wasn't the future. So he started going through this apartment training to learn how to acquire and underwrite. And in one of those conversations, he asked me if I wanted to be his partner. And I remember the very first time that he brought that up, I was like, sure, whatever. I don't have millions of dollars to go buy apartments, but okay. Right. So that was my initial introduction to the whole thing. I didn't even know that buying an apartment was a thing, right?
Right, me too.
Here he is telling me that we can go buy apartments. I'm like, yeah, whatever. And I didn't think much of it, and I kind of left it at that. And then, this was probably 5 years ago. Right around that time, I started attending these meetups out here in Denver by this guy named Adams. And he was basically preaching the same sort of thing, right? He was talking about how you can team up with different people and just go bigger. And then everybody, as long as everybody is in line with their goals, everybody wears a different hat, right? So he put it in those terms, right? Everybody wears a different hat, and you concentrate on acquiring a significantly larger property. And by doing that, you can get to your goals a lot quicker. So as I started looking at this, I started thinking, not only can this complete my retirement, what I want for retirement, I could actually replace my income, right? So that's when it started to become real for me. Like, okay, I don't have to wait 20 more years for me to retire to be able to live off this money. I might be able to do that a lot quicker, right? As long as we have a team up with the right people and we pursue the right sort of assets.
Nice. So two things happened for you. One is that you got an invitation from your partner to join you in the apartment investing world. And like you said, you didn't even know that was a thing before he posed that question, right?
I didn't know. Like most people, I thought, when you think of investing, you generally think of two things. You think of flipping a home or buying a rental, right? Yep. That's about it. Yep. But there's so many other niches. You just kind of have to enter that world of real estate, and then you start realizing that there's so many other things that you can do. But unless somebody tells you about it, or unless you go seeking it out, it's always going to be just flipping and rentals, right?
Yeah. Well, we have a very similar background in this, in that Adams was a big part of getting me going in a huge part of getting me going in apartments. And when I say getting me going, what I mean by that is basically instilling a belief in me that this is a possible thing to do, that it's not so daunting, that there's numerous different ways of being involved in apartment building investing, and you don't have to have all the pieces and all the questions answered to get deals done. It's a team sport for sure, and you need good partners with resources and that sort of thing. And so anyway, he came and spoke to us at a Utah Real Estate Investor Association, and I went to his Finding Deals Summit in 2019, and early 2019. And that was really, we were already in some smaller multifamily stuff, but it was really when I got my head around and my belief around this can be done, and it should be done, because it's an amazing asset class with so many just amazing qualities and bonuses and tax advantages and appreciation and cash flow and risk mitigation. And we go on and on. So I think that's pretty cool that Adam was a part of your mindset and your belief change as well.
But he honestly, the biggest thing for me was, I've been stuck behind a cubicle for 25 years doing IT work, being an IT manager, and now getting out into the space, putting yourself out there, trying to attract investors and trying to attract deals. This is like a whole new thing for me, right? Mm-hmm. This is like I'm out of my comfort zone, and that's why it's very exciting for me because, like I said, I'm an introvert by nature, right? And I've been stuck in a cubicle, so that's not helping. It's like I didn't talk to a whole lot of people, and now I find myself that in order to make this deal happen, I have to get out there and talk to people, right? And that's been part of the fun for me, part of the excitement, and Adam certainly helped me with that. It was just at the beginning, it was like, well, I feel kind of like an imposter, right? Because I haven't done anything. I'm trying to land our first deal, and he's like, you can't think that way, right? So he has certainly helped me a lot.
It's awesome. So you, at some point, were compelled or led or whatever to consider mobile home parks as an investment vehicle. Can you talk about what happened there? How did that come about?
Well, yeah. So when my partner Steve and I decided to get serious and start looking, which is probably now 3 years ago, we started looking for apartments, right? But we started looking for stuff here in Denver, where I live. And we quickly found out that everything was so overpriced. We couldn't find anything that made sense. So we started looking, further south into Colorado Springs and eventually all the way down into Albuquerque and into Tucson. And we couldn't find anything that made sense. So at that point, it's like, well, we just got to keep looking. Maybe we should concentrate on other markets, right? And maybe something that's a little bit more remote. So at that time, we settled that we were going to concentrate our efforts on Phoenix, Kansas City, and Orlando. So that's kind of what we did. And we figured it was probably going to take us about a year to actually find something, right? Because like most new people, you get hung up on by the brokers all the time, but you got to just be persistent, right? And we figured it was going to take us about a year. And it took us exactly 13 months before he came back to me and said, hey, I think I got something. And I said, well, what do we got? He says, I got this trailer park in Cape Canaveral, Florida. My first thought was like, no. Mm-hmm. A trailer park? Are you kidding me? How did we go from looking for an apartment to finding a trailer park? No way. I was completely against it. Mm. And then he told me, "Well, look at these numbers." And he goes, we're not going to find an apartment with these sort of numbers. And I looked at that at the underwriting sheet, and I thought, wow, this is pretty awesome. So I said, look, let me bury my head in every book that I can find and every podcast. Give me 10 days. Let me just do my research here. And that's what I did, right? I downloaded every audiobook on mobile home parks that I could find. I listened to every podcast that I can get my hands on. Mm-hmm. And after those 10 days, I basically thought, not only is this the right asset class for us, I think it's timely because, there's a lot of talk about market collapses and real estate market collapses and this and that. And you don't know that, right? At this point, it's just talk, but there's certainly a lot of uncertainty around the economy. So mobile home parks just made a lot of sense for us from an economic point of view, right? Because where do people go when, if you can't afford a $500 lot rent, where are you going to go? There's nowhere else to go, right? So from that point of view, it's like, okay, this just makes sense for us. And not to mention, we don't do a lot of the, since we don't own the mobile homes themselves in a lot of cases. We tend, when we buy a park, we aim to sell them. So at the end of the day, we don't have to maintain them and we don't have to carry the insurance on them. We just have to provide, we have to make sure that the infrastructure is working properly and that any single family homes that are on the properties, we do have to take care of those. Water wells and septic systems, as long as we understand them. Another thing that I didn't understand too well, right, because I never worked on a septic system or a water well. Steve had, because he would build out these homes out in the middle of nowhere. So he he felt comfortable with water wells, but I certainly didn't. It's like, why would we do that, right? If we're going to maintain these things, but as long as you understand those systems, it shouldn't be a deal killer.
Gotcha. So your Cape Canaveral property, you ended up buying that.
Correct.
Right? How many units is that?
It was 18 units. It was a smaller park.
Okay.
And what's interesting about that is that the lady that we had purchased it from, she had owned it for about a year before she had inherited from her mother, who owned it for about 30 years, 25 or 30 years, and she had never raised the rents. Right. So you had people that were in that property who had been living there forever, and they were paying something like $250 lot rent. Right. And so there was an opportunity there for us to be able to stabilize those rents, clean the place up. What's funny is that that park was part of a bigger park. There was more parks in that area, and they were all managed and owned by the same people. Right. So if you drive through the front of that, you would see that you drive through this big section of mobile homes that were well kept. The yard were well manicured, and then you go to the very end of that park, and there's this small little strip of mobile homes that look like garbage, man. I mean, everything just looked like crap, right? It's like, okay, what's going on here? So, and that's what we were buying, right? So that's ultimately what we look for. We're looking for value add properties, stuff that looks old that we can turn around and fix, and either replace the aging mobile homes with new ones or with newer ones. Or if the existing ones have good bones, we'll just rehab them and either sell them for cash or do owner financing. So there's different opportunities there to be able to make some capital.
That's exciting. So I've never looked closely at mobile home park underwriting. In the apartment building world, we measure, one of the big variables is cap rates. And depending on where you are, and listeners, bear with me for a second. If you don't know what a cap rate is, I'll briefly explain. But the cap rate is going to vary from market to market and from asset class to asset class. And a cap rate basically is just a numeric description of how much money you are going to get back on 100% cash investment in a property on a cash flow basis. So if you're running at a 5% cap rate, for every $100,000 you invest, you're going to get $5,000 back. And the cap stands for capitalization. So you're recapitalizing that money at 5% at a 5% rate. So if a cap rate's higher, a 10% cap rate, that means the property is worth a lot less. And you are in fact you're getting more cash flow out of it in relationship to the price. So my question is, a really good apartment deal that pencils well is, they start to pencil out around 6.5% cap rate or so, depending on the deal, of course, but that's when they start to make sense as they're currently running, right? So a real good deal on an apartment building, you used to be able to get things for 8% or 9% or 10%, depending on the market and the asset.
It's becoming difficult to find those, right?
Right. So apartments, but that's not even heard of these days. And in Salt Lake City, apartments sell for a 4.5 cap and or a 5 cap, or depending on the asset. Right. So how does the mobile home park conversation translate as far as returns go?
Yeah. So normally what we've been seeing, at least up until fairly recently, is that we usually expect maybe 2 points higher. So like an apartment complex might be 5 or 5, and we might be able to find a mobile home park that's maybe 7 or a 6. The added, I would say that with the since they've become so popular, in the last 6 months, and there's there's a migration of investors that are now looking for mobile home parks, right? Because they weathered the storm of COVID. So all of a sudden you have a super hot asset. So that has driven the competition up, right?
Right.
And then the cap rates along with that. So it's harder and harder to find those sort of deals for sure.
So it sounds like cap rates are actually kind of similar to apartment buildings. Maybe
maybe a little higher, but not by much. And with the added competition, it's going to be even harder for sure.
And what's interesting though is so you've got slightly higher cap rates, or maybe a point or two higher, which actually is pretty significant. And yet you've got, would you say, a less risky asset than an apartment building?
Well, considering I believe so, and the reason for that is, we've seen an influx of investors flock over to mobile home parks for the reason that I mentioned before. One of them was you have low tenant turnover, right? Because if you have a park where all the tenants own their homes,
right,
they're not going to leave, right? So what that does is it creates stable cash flow, and if they own their own mobile homes, you don't have to pony up for the maintenance. You don't have to carry insurance on. Mm-hmm. Ultimately, what that does is it creates a more stable cash profile or cash flow profile, right?
There's less moving parts in your expenses and your financials. Yeah, it makes total sense.
One thing that we are seeing, and I'm sure you're seeing this in apartments as well, is that the real big money, right? The private equity firms, when there's a 150 or a big mobile home park for sale, they snatch those up real quick. I mean, you can't compete with cash, right? So that's one thing that we've been seeing with the higher unit mobile homes. I mean, if we can pursue 100 unit mobile home park, that would be awesome. But we're competing with a lot more people at that level. Yeah. So we're finding that if we pursue a bunch of the smaller stuff and just roll a bunch of those up, well, we can make money there too, right? It's just going to take us a little longer to get to where we want to be. So if we're rolling up, 25 unit, 30 unit mobile home parks, okay, there's still money to be made there. We can still turn those parks around and be able to make some money and still be able to provide a solid asset to our investors. Okay, let's just do that, And then that's not to say we won't do an apartment. I mean, we started out looking for apartments. And if the opportunity comes up in the near future to land an apartment, why not? Storage, we like storage, but at this point in time, we find that mobile home parks are they're going to be our little niche, at least now for the foreseeable future.
Mm-hmm. So, cool. So since the 18 units, how have things gone since then? What's happened with you guys since doing the 18?
Yeah, so we started out doing that one at Cape Canaveral, and then we landed another park in Daytona Beach. So our little area is our little niche where we concentrate our efforts, and we've managed to establish relationships with our brokers. Is probably in and around the Space Coast in Florida, right, all the way around into Orlando, up into Daytona. That's where we are acquiring a mobile home. There's tons of them in Florida, and there's tons of mom and pop operations in Florida. So there's plenty of opportunity to go find more. We're about to close on a smaller one in a little town called Port Orange, which is on the south side of Daytona. And what's beautiful about that guy is that he backs into like a waterway. Right, so it's got an amazing view. So it's going to give us an opportunity to do a little bit more there. We want to drop in some more upscale mobile homes and kind of create more of a, not resort level, more of a boutique mobile home park that where we can attract a higher end tenant. That's our goal with that park. But yeah, there's opportunities there for sure.
I would say that sounds like something that would really be in demand, because I think the nature of a mobile home park is interesting. For those of you that don't know how they work, the owner, Eloy, owns the land and the lots that the mobile home sits on, and that's it. The mobile home is owned by the tenant or the owner, usually, although I would assume that sometimes they get rented out.
I would say it's on a case-by-case basis. Like this park that I was just telling you about, we're gonna actually keep them and rent them out. So that's an exception. Our other parks, we try to get rid of all the mobile homes and just keep the land.
Yeah. So my question about that is, and you touched on it. So you're thinking of you said drop in some nicer mobile homes into the not Cape Canaveral. What was the name of the Port Orange?
Port Orange.
Yeah. So will you be buying those yourself, putting them in there, and then owning those as well, and having that as part of the asset? Is that how that works?
Yeah. So what we're going to do is we're actually going to take out a business loan to buy those mobile homes, and then in the future when we refi, we'll pay that off, and the part will own it.
So great. So you'll have some really nice new places in there, and then will you rent those?
Yeah, we're going to rent them out at least for the first few years. We want to rent them out because we can collect more from rents, and then the existing mobile homes there, they're older, so we're just going to rehab them. So the plan being is that we're going to have just a gorgeous park. It's got a dirt road, so just by blacktopping that driveway that runs down the middle of the park and putting up a new sign, it's going to give that park a whole new look. So that's ultimately what the kind of stuff that we look for, an opportunity where we can come in and add value, right, and be able to drive some of those rents to a stable market rent. So
how does picking up the mobile homes themselves and renting those out, how does that pencil? Does it support your functional IRR? Does it make it better? Does it enhance your returns?
Sometimes, yeah. In this case, it made more sense to keep them and rent them out because the numbers just penciled out where we can drive better returns. And then, in 5 years, that might not be the case anymore, and it might make more sense to just sell them for cash or to own the finance, right? But at least for the time being, it just made more sense. Why don't we just keep them? We'll rent them out. The insurance was not as bad as we thought it was going to be, being that it's Florida and hurricanes and all that. So we were kind of surprised by that. So it just made sense for us to just keep them for the time being, and then down the line, several years, if we decide we want to sell them, we'll sell them.
What's your entry cap rate look like on that deal on Port Orange?
I believe that one was like a 7.5. Don't quote me. I'm off the top of my head. I think it was 7.5.
Okay, so what that means is that the current cap rate, based on the current expenses and income, so your financials, your T12 financials, is penciling out at a 7.5 cap, which is that's a good, very nice return sort of scenario. Generally speaking, that's enough of a return to provide for all your partners and investors and you. So what is it? Would you say that is a market exit cap as well? In other words, if this property was stabilized, up to date, everything humming along nicely, would it also sell for a 7.5 cap, or is there an opportunity to maybe move lower to a 6.5 or 6, something like that?
I think we were looking at exit at around the 6%. Wow. But honestly, we wanted to keep it. This is one of those that we want to, like, I'm a buy and hold guy. I mean, if I buy something, I want to hold it forever. And one of the reasons that we like this park so much is because there's going to be an opportunity to be able to hold on to something for a very long time. Mm-hmm. The other thing that made this particular opportunity unique is that we have been negotiating with the seller for several months, actually. We negotiated owner finance with her, right? So it's an opportunity for us to not have to come up with as much cash up front, right? And be able to negotiate a great term with her. And she gave us the flexibility to, if we want to refi out of that loan in 3 or 5 years, we can do that. So that I think we're going to see more of those sort of opportunities moving forward with mom and pop shops, right? Because we're finding that there's a lot of mobile home park owners that are elderly. They don't have any money to fix up their parks, right? But they don't know that owner financing is an option, right? They don't get rid of it because it's a source of income for them. But they don't have the money to keep up and fix the place up. So a lot of this is just educating. When we talk to potential owners, it's educating on the opportunities around seller financing, right? Moving from the position of owner to the position of bank. A lot of them don't know that, right?
Right.
And so it takes some time to kind of educate them and build rapport with them. And in this case, we had been working with the seller for like 8 months before we got it to commit. So it's one of those things that you just gotta keep plugging away, and you gotta keep following up and picking up the phone and calling them. Right? You can't just give up. Calling after your first or second call. You gotta keep following up. For sure.
Mm-hmm, mm-hmm. How did you find this seller?
Through a broker. Our broker who we purchased our Daytona property through. When we purchased the mobile home park in Daytona, we went to go visit this property, but at that time she wasn't sure she wanted to sell. So that's kind of when the conversation started, right? And we met her face to face. So one of the things that we do when we try to get out to somebody. Either one of us in the general partnership, we try to make it out to Florida at least once a quarter. Mm-hmm. One of the things we do is obviously we go visit our properties, but we go look at other stuff too, and we try to go make appointments with other sellers. We talk to other sellers, potential sellers, right, and park owners. So we try to line them up. So even if they're not ready to sell today, maybe they will be in a year, maybe 2 years, right? And hopefully they'll think of us when they're ready to sell.
Perfect. That's great. So you are looking at this point for what? Like, let's say you can wave the magic Eloy wand and have just a great deal pop up in front of you. Where would it be? How big would it be? Et cetera.
Well, it would certainly be in the Daytona Beach area, up or in the Space Coast, maybe Tampa. We love Central Florida. I think 60 to 70 units would be an ideal park for us right now. Gotcha.
And why is that? Is that is that what pencils best?
If we can find a 150 or a 200 unit park, that would be awesome too. Mm-hmm. It's just we're having to compete with the big money on those, right?
Sure.
50 to 60 seems more reachable.
Yeah. So, and that's the same in apartments. It's one of the reasons why smaller scale apartments and mobile home parks are more approachable to a novice investor, beginner, or somebody, just getting started, is because they are smaller, right? There are the institutional money out there and these big groups and the funds and the family offices don't want to write checks smaller than $5 million or, even bigger sometimes. And like you said, a lot of times they're fully capitalizing the purchase, completely 100% cash. And that can be very
possible to compete with that.
Yeah, it's very, very difficult to compete with that. And, Salt Lake City is shifting from a mom and pop owned inventory to an institutionally owned inventory right now. And you're seeing that in many, many hot markets around the country. And it sounds like it's the same with mobile home parks. So what that does is it creates it creates this kind of vacuum between, say, your 4 or 5 units and 60 to 70 units in Eloy's world, right? Where there's, and everything in between there's going to be a lack of interest and competition from the big boys and girls that have the big, deep pockets. So it creates a window of opportunity for us as, newer investors or smaller investors, however you want to say it, to come in and pick up units. And you do enough of that and put enough of them together, and you can get your unit count to wherever you want it to be. But so Lance Edwards wrote the book, How to Make Big Money in Small Apartments. And he said, it's a great book. I recommend it all the time. And he said he would have called it How to Make Big Money in Big Apartments, but you wouldn't have believed him. We wouldn't have readers if we wouldn't have believed him if he had said big. But I think even more importantly is with small apartments, they intuitively are easier to get into because of the lack of competition and the lower barrier of entry. Ironically, what we're finding is that it's harder to raise money in smaller levels than it is in large levels.
Yes, I would agree with that. Part of when we started, well, if you go to the meetups and you go to some of these, the Zooms and all that, everybody's looking for the big thing, right? They say go bigger, and that's great. It just seemed like something that wasn't working for us, right? So when I was looking at this, I thought there is an opportunity here, right? In the smaller stuff, because it's the really big players, they're just ignoring the 20 and the 30 and the 40 units. So, okay, well, maybe we shouldn't ignore those, right? And it's an opportunity for us to be able to present to any potential investors something that is slightly different, right? Now,
yep.
You're right in that there are investors out there, potential passives that, they're looking to invest in the bigger unit stuff because of the quantities of scale. Right. And, I would, you might feel different, but it's a matter of, it's a risk profile thing too, right? There's still going to be an opportunity to make more money in the smaller stuff. Yeah, you do lose the economies of scale, right? It's 20 units versus 100 units. It's gonna make a little bit of difference.
Yep. You can gain back the economies of scale if you buy enough small complexes, exactly. Right? So, yep. And this comes to being a area expert or a market expert in your particular location, but we're buying a 70 unit portfolio right now in Columbus, and we're actively looking for 20, 30 units, 10 units, 15 units nearby, because it'll become a bigger asset, more scaled up, bigger economies of scale, and therefore more attractive to investors as when it comes time to sell it. So yeah, you can assemble a portfolio and then and gain the economies of scale back. But that's why we all got into multifamily and or mobile home parks and storage and everything else. Commercial real estate in general is because of the economies of scale and the ability to leverage relatively small sums of money against very large cash flowing assets.
Exactly.
Yeah. So awesome. Well, so let me just ask you this too. Why Florida? How did you come up with Florida? I mean, I know a lot of the reasons why, but maybe tell the audience why Florida.
Well, I love Florida personally. I envision myself retiring there someday. I live in Denver now, but the older I get, the more I'm starting to dislike the cold. So I definitely want to look long term into warmer weather, and Florida is the place for me. That was one of the big reasons that we picked Orlando as one of our spots, and frankly, we got lucky that we landed something there right off the bat. But also, according to the U-Haul statistics, Florida, at least up until last year, was the number one migrated to states. I think it dropped down to number 3 this year, but it's still from a migration point of view, right? There's tons of people moving into Florida. What that means to us is that we're not going to have problems finding tenants, right? As soon as we have an available spot, we put up an ad up on Craigslist or a Facebook Marketplace, and it goes, and we'll get dozens of calls on that one spot, and it's gone within a few days, right? That's great. If we own the park in the middle of Wyoming or Montana, I don't know, the lot might sit there for a few weeks before somebody looks at it, right? Mm-hmm. So it's not the same. Mm-hmm. So, and then plus that Daytona, that Central Florida area, it's super hot in terms of population and job growth. So for us, we're very happy with that.
Yeah, it is a smoking great market. It's very landlord friendly, very business friendly, and it's there's a reason why a lot of people are investing there. There's nothing bad about investing there.
No.
Unless you're not into heat and humidity, which frankly I'm not. So, but I do like buying and working in places that I like to go, and there's a lot to be said for that. There really is, because it makes work feel a lot more like play when you're going somewhere that you enjoy being.
Exactly.
Yeah. So good for you guys. So talk about how mobile home parks have done during the pandemic.
Yeah, so I think that part of the reason that they've become so hot in the last several months is that we haven't, at least, our parks, we didn't lose any tenants due to COVID. And some of our colleagues that are in some of the groups that we belong to that are also mobile home park owners, we just haven't seen some of the things that some of our apartment owner friends have seen, especially the ones that live out on the West Coast, right, where people just decide not to pay their rent, right, for months at a time. We haven't seen that in terms of mobile home parks anywhere. So, I mean, from that perspective, I would say that's one of the reasons that we've seen so much added competition of people wanting to look for mobile home parks for themselves, because during the pandemic, they've been a safe asset. So that just goes to show you that in a potential downturn where we see similar types of negative economic effects, people are going to be looking to move down, right, into something that they can afford. Like I said, if you can't afford a $500 lot rent, I mean, where are you going to go, right? There's nowhere else to go unless you want to move back in with your folks. So from that perspective, there's always going to be people looking for affordable places to rent.
Yeah, and I believe it's the Sharp scale that measures volatility inside of the commercial real estate space, and assets like assisted living, retail, office space are at the high end of the volatility scale, and assets like self-storage, multifamily apartments, and mobile home parks and RV parks are at the low end of the volatility scale. And that, of course, obviously, reflects on risk as well. And so you're seeing a similar phenomenon in apartments, where people who are in retail and office and restaurants, are in hospitality and assisted living, are moving funds out of there because of the risk that has been revealed by the pandemic. And they're moving it into assets that are universally needed and where there's massive demand on it, no matter what's going on with the pandemic. And that's particularly true with where people live. Everybody needs a place to live. And like you said, Eloy, with mobile home parks being basically the least expensive housing that you can get, I mean, arguably, like you said, where are you going to go from there if you can't afford that? And so rents don't typically go down in recessions, either in apartments, or I would think lot rents would stay very consistent in a downturn or a recession. And that's true with workforce housing and apartment buildings too.
That's right.
Yeah. Great. So what's next for Apex Communities?
We're going to continue trying to roll up more mobile home parks in Florida, and then we're also looking at potentially Texas and Georgia as alternative markets. I love Kansas City. I still want to own stuff there. So, if there's an opportunity to move into Kansas City and start buying up some parts there, I'm all over it.
What do you like about Kansas City?
The growth, the barbecue, obviously, but Kansas City to me has always been a very unique city. I think as people continue to move away from California, they might bypass Denver, because Denver isn't a great place to stop if you're looking for affordable housing, right? But Kansas City might not be at that spot.
Right. Yeah, no doubt. Salt Lake City is unfortunately an obvious stop as well, as California what's the word? Not immigrants, but I basically California residents. Yeah,
an exodus.
Exodus. Yeah. The pioneers are leaving California now instead of going to California. But they're like you said, they're going places like Austin, Texas, Orlando, Florida, Kansas City, Salt Lake City. Denver, not so much, right? Because Denver's super expensive, and it's almost West Coast expensive now. Seattle, same thing. Like, these Western Phoenix to a lesser degree is doing very, very well. Not quite as expensive as some of these other markets, but you got to look at these big trends. And like you said, Florida was number one in immigration for a while. And I think it's Texas. Believe it or not, last I looked at this, Tennessee was number one.
Tennessee was number one.
Yeah. Which surprised me, but Nashville's blowing up big time. And then, I've never been there. I hear that. I need to get there. And then I believe it was Texas, and then Florida, and then Ohio actually was number 4. Florida might've been number 2, but I think it was number 3.
It was number 3.
Yeah. And then Ohio, and all of it's interesting. I know Ohio, I'm from Cincinnati, and we are working in Columbus on apartments. And so I know it pretty well. All of the growth in Ohio is really happening in the Columbus, Central Ohio area. And the other big cities are barely growing at all. So, we've captured this buzz in Columbus, in that area, in our assets, but we're competing with coastal money and institutional money. And, we want the big apartment buildings, right? Like, we want the 150, 200, 250 unit buildings. So we know that we're going to have to often compete. And so we look at more tertiary markets a lot of times, markets that are within a commute distance of Columbus. And we're finding some really nice deals there. So great. So talk a little bit about your podcast real quick. You are getting ready to relaunch that, I think, right?
Well, no, I was thinking I started the Savvy Mobile Home Park Investor as a way to put out some quick, 6-minute, 7-minute episodes, just to kind of get people get their feet wet with mobile home parks.
Right.
At some point in the future, I would like to start more of an interview-based podcast, but that's down the road a bit.
I think you should, Eloy. I think you'd be really, really good at it. And I would listen. This is as far as I know, this is not an area that is nearly as well covered as apartments are, as far as podcasts and books and audiobooks and whatnot. So I see a huge opportunity for you as a thought leader to really be big in this space. And, you're well connected and with Adam and et cetera. And I think you'd be fantastic at doing the interview format, for what it's worth.
Appreciate that. Thank you.
Yeah, you bet. So what would you say to somebody that's thinking about doing that, that wants to learn more about mobile home park investing in particular, or is thinking about getting in, like you did? You said you took 10 days to really dive in and listen to every podcast and read every book and probably YouTube videos and all that stuff. Where would you point somebody?
It's amazing how all it takes is somebody helping you in a direction before, because everything's on YouTube, right? There's nothing you can't find on YouTube and or Google, but sometimes you don't know what to look for, right? And if you know you want to be passively invested in something, there's tons of great content on YouTube. You just got to know what to look for. I wrote this free ebook, The Top 3 Reasons to Invest in Mobile Home Parks. You can feel free to download that, and we can talk about that. That's at partnerwithapex.com. Just drop your email there, and you can. That's one way to get a hold of me. But there's tons of books. There's a great podcast out there on mobile home parks. The Savvy Mobile Home Park Investor one. There's a few others as well. learn as much as you can. I mean, if you feel like you want to do this, whether actively or passively, you want to know what you're investing in, right? It's that's one of the lessons that I learned, particularly, before 2008. I was just kind of throwing money at a 401k without knowing what I was investing in, right? And it turned out I was investing in these mortgage REITs, right, that caused the tumble of 2008. Mm-hmm. That was me not knowing, right? So I made an effort. I made it a point to educate myself in terms, not just in real estate, but down to whatever we decided to niche on. In this case, mobile home parks. I got my hands on every book that was out there. Mm-hmm. I listened to every podcast, and there's so much content. It'll drive you crazy, but there's just so much stuff out there. Just do it.
Yeah. Again, like, it's unlike any other time in human history where you can get a PhD level education sitting at home on your computer, watching free YouTube videos and listening to free podcasts. And I mean, reading free blogs and getting an Audible membership and downloading the applicable audiobooks. Like, self-education is a thing big time now. And that's where everybody that's good is getting good, I think. To me, the paid classes are 10 years, 20 years ago, before specialized knowledge was so available and easily found, so to speak. I don't, these $25,000 real estate courses, to teach you how to get single family seller financing and stuff.
It's not a wholesale, right, for 40 grand.
Right. They work. I mean, it's right. Exactly. Like, go do a deal, and you're going to learn more doing a deal than you will in a class. And I'm all about education. And look, if it works, it works. If it gets you where you're getting, then great. I will say that I'm a huge believer in paid masterminds, and we can talk about that. Yeah, we'll talk about that another time. But the strengths of a mastermind, and where you've got peers and coaches that are actively giving you really great input and feedback and criticism and ideas and brainstorms, and basically are committed to getting you to the next level. That's a whole different ballgame, and that's worth every penny, in my opinion. So
I agree 100%.
So partnerwithapex.com. Is there any other way that listeners could get a hold of you, Eloy?
Eloy at apexcommunities.net is my email address, or you can just go to our main website, apexcommunities.net, and you'll have my contact information there. My calendar link is right there. But it's also at partnerwithapex.com. Just drop in your email and you'll get my calendar pop up. Happy to have a chat with anyone that's interested.
Great. And partner with Apex, I'm assuming, refers to the opportunity to potentially partner with you on a partnership basis, potentially a capital partnership basis. Is that what that's set up for?
Yes, sir.
Awesome. All right, listeners. Well, there you go. You know how to get a hold of Eloy. You know what he's looking for in the way of deals. So you smart listeners that read between the lines and look for opportunities, go find something in Daytona that Eloy would want and call him. That's how you get deals done these days. If you want to do it with me, go to Columbus or Oklahoma City or Salt Lake City and find deals there. That's again, there's no, I won't say easy, but there's no more efficient way to do a deal and get involved in a deal than to go find one and take it to somebody that knows how to get it done. That's a ticket right there, right into the industry. You'll learn so much. And the law of the first deal is everything. Like Michael Blanc talks about the law of the first deal, and getting that first deal done is huge, guys. And what happens afterwards is amazing. It gets really fun afterwards. It gets a lot easier. People start taking you a lot more seriously, and you have a lot more credibility because you've closed a transaction and you're a proven commodity. So So on that, Eloy, is there anything else that you'd like to share with the listeners that we haven't touched on today? Any last words of advice?
Only that, just to follow up on what we just spoke about regarding, self-educating YouTube. That's all of that is great, but at the end of the day, you have to do something with all that education. That you have to take action. I encourage everybody that is interested in doing something that's truly life-changing. Don't just educate yourself. You have to take action. So take some action.
Yep. Keep your feet moving. The universe loves people that work hard and put themselves in good positions. Luck, is my opinion. Luck is all about being in the right place at the right time, which is about being intentional and taking action, right?
That's right.
Putting yourself out there. So awesome, Eloy. Well, this has been a great discussion. I learned a lot today. I'm definitely interested in learning more about mobile home parks. I'm really locked into apartments right now, and I am a believer in especially when you're getting started or are newer to the industry. I'm a believer in picking a lane and doing it really well, like learning as much as you can about that one lane and doing it really well. So it's, I wanted to bring Eloy on today to talk about something that might really resonate with you as a listener. And it's a new it's something we haven't talked about before. It's a new opportunity inside of residential commercial real estate that looks a little different than an existing apartment building does. But as we've talked about, there's a lot of compelling things about them, including higher returns, quite frankly. So, Eloy, thank you, sir, for being here and for sharing your wisdom and knowledge and expertise with us. I really look forward to continuing to be in this Adam Adams group with you, and seeing you every week is a fantastic thing. And I look forward to seeing your success and getting to lots and lots and lots of unit count.
Thank you, Tate. I appreciate you inviting me on, and it was a real pleasure to be here.
Yeah, awesome. Thank you, listeners, for listening to another episode of The Apartment Guys. We will see you next week with a good one. I do want to mention that we are about to launch the downloadable ebook on the Greenlight Equities website, which is my company. The downloadable ebook is called FIRE, which stands for Financial Independence, Retire Early through apartment building investing. So FIRE through apartment building investing is the name of the ebook. And I think you're going to like it. It's not going to be free for always, but it is downloadable at www.glequitygroup.com. That's the website address. So that's a fresh announcement, has not been announced before. It's hot off the presses, and really looking forward to getting that book out and having you guys become financially independent and retiring early. So on that, thank you all very much. Go have a fantastic week. Take care, everybody.
Thanks for listening to The Apartment Guys with Tate Seamer. Tate and Friends are grateful to have you as a loyal listener. If you like what you've heard, please subscribe, rate, review, and share with friends on your Apple Podcasts, Google Play, Spotify, or any other podcast platform. Also, check out Tate's YouTube channel for videos of many of these episodes and more. Until next time, take massive action steps and rock on.